Hi, welcome to the Market Alert for Thursday, the 21st of April 2016. And so, yesterday we see the market giving a buy signal at the start of the session, but of course we were waiting for the crude oil inventories out at 3:30. The market was going sideways. You had the chance to get out of this as the market moved back to the entry price before the economic news was released. It's a high impact news item, and here you will see the figure came out at 2.1 million barrel surplus. Forecast at 2.1, 6.6 before. That said, the traders used this to bring the market down and then brought the market back above the psychological level, which is going to be the 18,050. We're now way above the 18,000 level, heading for 18,200, just 100 points within the range of the all-time high that I keep barking on about. So we see the market move higher. We get the signal there, just at 20 points just over in this trade as the market struggles to take out the psychological level there of 18,100, but then does so later on, moving up to the 18,150. So the market is starting to just grind slowly higher there. We had a buy signal late on in the session. Had you have taken this one, then you would have seen an 18-point loss on this, and then we get the sell signal there into the end of the trading session at 10 minutes past 8, an hour before the close there. You see the market moving lower. In the daily charts, you've got the situation here where you can see the market now above the 18,137, heading back to the all-time high, which is marked up there, 18,364. And in my opinion, that's where the market's going before it turns and goes south. And if you look at the volume, you can see this market now, that the volume has just virtually disappeared. There has been an increase, a slight increase in the up move, but it's way below average. On the news front today, what have we got? A press conference from Draghi, and then 3 p.m. we've got Carney. So again, they're wheeling these big guns out to try and keep the market buoyant, promising the land of nirvana and a cure for the great recession that we've had for the last 8 years, on emergency interest rates for 8 years in the UK, and still no end in sight to actually curing the problem, only making it worse. Which, funny enough, an article here on Zero Edge, Keynesian central bankers wrong from the beginning, but no one to stop them. And it's absolutely right. I mean, you just have to read through this and you can see exactly that they haven't got a clue. It's only a couple of paragraphs as well, but it just sums up exactly how they haven't got a clue on how to actually cure this problem, because they didn't allow the banks to go bust in the first place. So we've got Carney and the ECB President Super Mario both out today, speaking at 1:30 and at 3 p.m. So you may want to stand aside at 3 p.m. Because for some unknown reason, when Carney speaks, the market really struggles to move higher. Unlike Draghi, who's now put in place corporate buybacks using taxpayers' money. So you know, who knows what is likely to happen, but on that basis, it may be worth just standing aside. No doubt after he's spoken, they'll use it to drive the market up to the all-time high there. In the implied volatility, a shame really. This moved up from 10.96 yesterday to 11.11, which I would have thought, given the market was moving higher, would have moved lower. But then, if you think about it logically, everybody knows, every man and his dog knows, that the insanity that is prevailing in the market at the moment, there is a risk now of it falling apart, and therefore it looks like the wisest traders in the markets, the option sellers, are thinking, you know, this is looking a bit ominous, so let's start marking up the implied. So the 10.96 may be the low, but who knows, if we get a really good update today, that will bring it down. We want to see that July 10.45 in place, if possible, or broken, and then that would give us the cue that we really are, you know, shows that the lunatics have taken over the asylum. It gives us that confirmation, and then we can just sit and wait for the volatility to increase. And when it does, I think it's going to be quite significant as well, based upon every other time that this situation has occurred over the many years that I've actually been logging this, and it's many years now. I uncovered this back in 1993, wrote articles for a couple of the trade magazines as well about this. It's a brilliant indicator of what's going on, and gives probably the only thing that isn't manipulated, actually, that is left untouched, because it's a true reflection of the fear, greed, and again, you know, the volatility, and also more importantly, things to come in the market. Right, well, that's it for the time being. And of course, when the whole thing does come tumbling down, what you've got to watch for is China. China are now part of the gold fix group. It's taken some of the power away from the US, thankfully, at last, stopping the scam of Deutsche Bank. I'm going to say JP Morgan as well, because that will come out shortly. And also Scotiabank, HSBC, where they've been rigging the gold and silver price for the last goodness knows how many years, no doubt under the direction of the Federal Reserve as well. Central banks have been acquiring more gold and silver than any time in history since 1964 in the last few years, and China being the #1 purchaser of gold. You can also see that China's 10,000 tons of gold will destroy the dollar. Absolutely right. Well, the dollar's doing a good job of destroying itself anyway, with the printing of the money, the devaluation of it. And at some point, in China are very, very smart. They don't plan for 5 minutes ahead. They do hundreds of years ahead of what it is that they want to do. And their plans generally come to fruition. At the moment, they're doing what we did in the West. They've printed money like it's gone out of fashion. And even as Soros said, who I'm not a fan of, but he's right, there's going to be a harder landing than 2008 for China. And when the whole lot starts to fall apart, which it is at the moment, the cracks are appearing, then make no bones about it, gold is going to be used as part of the new system that is going to come into place, because this printing of fiat hasn't worked. The central bank is printing more and more money, hasn't worked. There's no cure for it. The only thing that's going to restore credibility and confidence in a financial system that's falling apart is to underpin it again with some form of gold and silver. And of course, when that happens, China are going to be in a position of power to dictate the price. And I wouldn't be surprised to see some insane valuations as well, just as we saw in the 1930s, where gold went from $20 an ounce to $35, which doesn't seem a lot today, but in those days it was an awful lot when they had to reset after the Depression. So keep watching this space. It's going to be very exciting to see how this lot unfolds over the next few months and maybe even years, but there's no doubts about it. The pieces are certainly coming together, and as I said before, the cracks are appearing in the current fiat system, which has been running for 43 years and is certainly on its last legs. There is nothing they can do electronically by creating new bonds or whatever. They are going to have to go back and use some form of gold standard, not necessarily 100% of the gold available, to reset and write off this debt, but it will certainly form a fundamental part, and anybody holding gold and silver will certainly benefit from this when they do it. Right, that's it for me this morning. I will see you in tomorrow's edition, reporting if there's anything else during today. But I think it's onwards and upwards as far as the market's concerned, and the insanity prevails to keep the illusion alive that everything is fine and dandy out in the fiscal world there. Right, that's it. See you in tomorrow's. Thanks for watching.